පේන්ට් කරන්න සහාය අවශ්‍යද? පේන්ටි TC ගයිඩ් එකක් නොමිලේම ලබා ගන්න මිස් කෝල් එකක් විතරක්ම දෙන්න.
At the Monetary Policy Board meeting of the Central Bank yesterday, it was decided to reduce the standing deposit facility rate and the standing lending facility rate of the Central Bank by 250 basis points to 13% and 14% respectively. The Monetary Board had reached the decision with the view of easing monetary conditions in line with the faster than expected slowing of inflation, gradual dissipation of inflationary pressures and further anchoring of inflation expectations.
What we are seeing in terms of balance of payment pressures is we are building up our reserve positions and economy also getting back to normalcy. I think as we predicted, but much earlier than a lot of the people thought, its recovery is happening fast. We thought we need to continue the recovery because we have stabilized economy, now it's a recovery process. So to support that, today is the start of the policy season cycle. We reduce our policy rate significantly by 250 basis points. I hope banks, especially one of the issues that SMEs and other lenders, the borrowers are facing, private sector, even the government, relatively high interest rates, but still in high inflation environment. We see very clearly inflation coming towards our target range much earlier than what we expected, supported by currency appreciation, adjustment in the fall and petroleum prices, global prices, all are helping favorable conditions, have helped us to bring the situation much earlier than under normal circumstances. That's why we think now it's time to relax monetary conditions. So we took this strong adjustment of policy rates. We hope that banks will transmit and bring down especially the lending rates for businesses. Those who are finding it difficult to service their loans, we know that some stresses we have seen. So that will ease the pressure, and also that will basically, hopefully, will start gradually banks expanding their loan books. Credit will be starting to flow into the businesses' economy. And with that, the economy will gradually recover. And also to support that, already in terms of foreign exchange situation, we relax the margin requirements already for LC margin requirements. And also, I think we are in the process of relaxing some of the foreign exchange capital account transaction controls that also will be relaxed. We already submitted proposals to the Minister of Finance, and also we are recommended to relax some of the import restrictions. Those have been relaxing gradually, but in the next phase, I think we would like to relax further to support the economic activities. We saw 3.1 billion level of reserves end of May number. I think we have already announced here the usable reserves that includes PBOC SOP. Even without that, I think we have about $1.6 billion on the usable reserves.
What were the steps taken by the central bank to get the country to this point where you feel that loosening of monetary rates is justified?
If you look at the IMF documents all published, our commitment is not the condition by IMF. Our commitment is to bring down inflation according to their overall macro framework, which tells us, or their indication, bring down the inflation single digit by end 2024. So that's our commitment. So we are bringing that even more than a year earlier of their targets. So that's where we are now. So we don't need to consult the IMF as long as we have delivered the KPI of our commitment. So that's where we are.
And Governor, any update on the DDO and what is happening there, and when there will be an announcement?
So that's exactly mainly is the borrower is the Minister of Finance, the Treasury. They certainly will announce what would be the strategy by the Minister of Finance soon.
About the 200 million owing to the Bangladesh bank, what's the current situation of that?
Our commitment agreement is to settle 200 million will be settled in August and September.
Economic growth rate, what is your prediction?
In our annual report, our prediction for this year is still will be a contraction by overall annual at a -2% prediction.
From the IMF program's targets, all the central bank targets seem to have exceeded the ITs that we see in March. So
March are indicative targets,
yeah,
not performance
targets. And even I think your reserve targets for June you may have exceeded by now. So, and also since many of these things are improving now, will they work on a different macro framework, and will the DSA be changed, or will they still work on the same DSA?
As I said, a review will happen after the next review. So at that point they will probably look at and revise policies and outlook. That can happen later at the review, but I don't think there's in between. Technically, IMF would not revise the outlook.
The banking sector, asset quality review, how is the progress?
First 5 banks they have completed, and we have got the reports, and the other 4 banks also they are supposed to complete by end of July. All will be completed. We are confident that we can maintain banking system stability. So banks are in a very good shape.